Hello and welcome back to my YouTube channel. My name is Investor NK and this is the basic technical analysis series. In this video we are going to talk about time frame analysis. In the previous video, which is the candlestick video, I told you that on the 1 hour time frame you can see a candle like this. This is a bullish candle, and on the M15 this 1 hour candle is going to be something like this. It's going to actually be 4, the clock hitting 15 minutes 4 times before you get an hour. So when you're doing time frame analysis, you're studying the chart in a top-down way. That is where some people talk about top-down analysis, right? So you're studying the chart, from the highest time frame, to the lowest time frame. That's why it's called a top-down way. All right, so if you're a day trader now let me just use this to give you the 4 types of traders we have. We have day traders, we have swing traders, we have positional traders, or say investors, and then we have scalpers. All right, so day traders only hold trades for a day. Swing traders can hold trade. There are intraday traders too, right? Intraday traders. These ones can hold trade up to a week, 3 days, just between days. Then swing traders hold trades for weeks. Then positional traders are investors. These ones are like in for the long term. They are in for the tech. Then we have scalpers. Scalpers are those who trade 15 minutes, they are out. 1 hour, they are out. Nothing really concerns these ones with lots and lots of time spent on the chart. All right, so the way you actually approach top-down analysis will be dependent on the type of trader that you are. A scalper does not have any business on the daily time frame. A scalper should start from M15 down to M1. A day trader now can do daily to M15, even down to M1 if you want to. All right, then a swing trader, you're talking of the weekly time frame, down to the H1, sometimes M30. All right, so the type of trader you are determines how you're going to do your top-down analysis. All right, so when we go into the chart, I'm actually going to show you the different time frames and everything, the candles, and how to actually apply it. Now, there is a strategy I teach my students to use when they are doing their top-down analysis. Okay, top-down analysis. Now, this M here stands for market structure. This stands for area of value. This stands for entry trigger. Okay, remember I said that you're doing your analysis from top to bottom. So now if you are looking at let's say you want to be a scalper now, okay, this is a scalper does not have anything to do with the daily time frame. They have things to do from M15. That's what I was trying to say there. Now if you're a scalper on the M15, you look out for your market structure. Is the market bullish? Is the market bearish? Is the market consolidating? Then on M5 you now start looking for your area of value. Okay, if the market is bullish, I want to buy at discount. Where are my POIs at the discount level? POIs means point of interest. Where are my POIs at the discount level? If the market is bearish, I want to sell at the premium level. So where are my POIs at the premium level? Right, then on the M1 you now start looking for, okay, when price trades into that my POI, I want to see a rejection candle. Okay, I want to see a bearish engulfing pattern for me to actually take a sell. So that is how you actually do your top-down analysis. You don't just look for random things, you actually follow protocol. Okay, so market structure first, and then area of value, and then you look for your entry trigger. Okay, your entry trigger. Now on this area of value, apart from looking for point of interest, you will consider location. Like you consider your support, you consider resistance. Okay, you consider when you're talking of the advanced technical analysis, there are so many other things like entry models that you also consider here. Okay, but let's keep it simple. So that's actually how you do your time frame analysis in a top-down way. Okay, you come from the highest time frame down to the lowest time frame, and these are the things you look out for. Your market structure on your highest time frame. If you're a day trader, you know that on the daily you're going to look for your market structure. On your H4, let's say to H1, you look for your area of value, your POIs, your location. Okay, then on your M30 to M5 or M15, now you will look for your entry trigger, your entry models, and everything. Okay, so let's go to the chart. So this is my AUDUSD chart. Actually, I've been trading this pair for a while. It's a currency pair, Australian dollar, US dollar. So this chart is actually on the 1 hour time frame. Okay, if I want to analyze, let me remove the drawings. If I want to analyze now, and I'm starting from the 1 hour, I'm maybe looking to just scalp the trade. Of course, you could see that I had analysis on the chart. This is 11-hour trade. Then on Monday, this was on Monday. It activated on Monday, I think during the Asian section on Monday, and then this is today, being Tuesday. Okay, so I'll remove everything here so that I can start all over. So this is a 1 hour time frame. So every candle here, what this is telling me is that every candle here represents 1 hour. So this particular candle here, this one, this long candle here, of course that should tell you that signifies 1 hour price action. Okay, so let me actually identify, or let me draw this particular candle now. I'll draw it to the tip of it. Let's go look for that candle on, let's say, 15 minutes, like I showed on the notice on the noteboard. All right, let's look for that candle on the 15 minutes. Let's see if that tool. Okay, give me a minute, please. Let me draw out the candle. Let me draw it out. Okay, so now let's go to the M15. Alright, beautiful. So you can see this is 1 o'clock, this is 1:15, this is 1:30, this is 1:45, and this is 2 o'clock. If you look down, you see Monday, 22nd July, you see the date there, and then you see the time. So you can see one 1 hour candle actually has 4 15-minute candles. Alright, so now if I'm a scalper, of course I want to analyze this chart now as a scalper. First thing I'm looking out for is, okay, where are we? Price is actually bearish. If you follow the trend, you agree to that. This, and this. So there is a bearish trend. Don't worry, there will be a video on market structure and everything about trend. So that's what we have. So since we are actually bearish, I'll be looking to take my sell. Okay, I'll be looking to take my sell. So this is my swing high for now. This is my swing high for now. I'll pick up my Fibonacci tool, okay, and I'll just draw this. The price is still moving, so I don't actually have a static point to put it. So let me just say I want to consider this low. So I want to sell from my premium zone. So this is premium now. Anything above 50 or above 50% is my premium. So I want to sell from there, and anything below here is my discount. Of course, if I was selling something, I'm selling it for 10 naira, another person was selling it for 20 naira, you want to buy from the person selling for 10 naira because you want a discount. And now, because of course you bought this thing maybe to make profit, when you're ready to sell it, someone else will say I want to buy it for 30 naira, another person will say I'll buy it for 25 naira. You'll most likely sell it to the person who wants to buy it for what? 30 naira. That's why you want to sell at premium and you want to buy at discount. Some people will tell you buy low, sell high. Okay, so let's go on. So this is the premium, and since price is bearish already, I still want to trade. So this is the 70%. I'm going to just take note of that. That's the 70%. So that's my M15. Let's go to M5 now. I'm just showing you how to do what is it called, top-down analysis. So on my M5, I want to sell. This is the 70. This is 70% of this Fibonacci. All right. So I'm going to wait for price to retrace back into this zone, and then this is where entry trigger comes in. You have to be patient. Waiting is also part of trading, right? So you're going to be patient for price to now come back into your zone and give you what? Your entry trigger. You wait for price to give you an entry trigger before you actually trade. You don't just trade. So for people who have trade entry models, when price now comes back to the premium, they will wait for price to now break structure. Some people call this choke, some people call it whatever they want to call it, and then they will now sell. Okay, so that's actually how you approach TA. You see, we just time frame analysis and market structure, premium and discount. You're already getting the picture. If you don't understand, don't worry. All these concepts will be broken down in future videos. So you just keep watching. Subscribe to the YouTube channel. Whenever we drop a new video, you get them. And watch the videos in accordance with how they were posted. Alright, so that this video does not get too long. I hope you got value. If you have any questions, you can drop them in the comment section. If you have access to my DMs, you can ask them in my DM. See you in the next video.